this is Kirk here again from Option Alpha. Just wanted to do a quick trading video to both recap our first month of successful trading under the credit spreads strategy. Now I know that the Iron Condors and the Naked Puts and Calls all expire tomorrow, and everything looks like those are going to be profitable months as well. But our credit spread portfolio did expire today. Completely profitable. All the trades that we made for December expiration were great. Here's actually just a screenshot of one of the first trades we made back, and you can see we made this back in November, late November. We started building this portfolio, so we didn't have much time to enter a lot of trades. We got 3 trades in, which is good. We usually like to get about 4 in, but again, you can see what we're kind of working with here in trading is this, these really high risk or high reward, low risk type spread strategies, both above and below the market. Now I'm going to show you on a chart here what kind of positions we had relative to the market. So this is the S&P, and this just kind of goes over what we had, and our positions here are in green just to kind of highlight the two areas. So you can see as the market was rallying higher, we had on the S&P for December expiration, we had a call spread up here and a 1280 and 1295 call spread, and then we had a put spread below the market at 1100 and 1095. So basically what that means is that as long as the market trades anywhere in between these two areas all the way up until expiration, which was today, then we get to keep all of our premium for our options that we traded. So again, it was a really good strategy for us, very, very profitable. On the RUT, which is the other index, the Russell that we traded this month, you can see we only got a chance to enter one strategy, and that was the call spread, and that was at an 810, 820 call spread. Now what's interesting about this is that we actually entered it right in the beginning of December when the market was actually rallying higher. And if I can try to zoom in here a little bit, when the market was rallying higher, we entered a call spread. Now typically if you sell just a naked option or something like that, if you don't get far enough out from the market, then even the market rallying higher, which is technically really not good for your position, we were still able to get far enough from the market to get a great premium, really good return on our money with these RUT call spreads. And the market rallied right up to it at expiration, but just couldn't rally fast enough. So again, this is just non-directional trading at its best, if you want to call it that. We haven't done the complete income report, but we will release that this weekend. Looks like we're right around 4.5% for return on the month, which is fantastic. Again, that's just a monthly trade. Now if we go back to the S&P here, and I'll just kind of take off these drawings, I think what we have on the S&P lately, just as a general market overview, is just kind of stalling really. You can see if I zoom in here, we've had a couple updates obviously in the beginning of December, but really those 2 updates in December were kind of it, and we've kind of slowly drifted higher every day. Nothing too major, right? Had a little bit of a correction yesterday, which we kind of assumed would happen, but we're just continuing to drift higher, and this really goes along with what we've continued to think is going to happen through the end of December, really. I think the market's going to continue to slowly drift higher. I don't think it's going to explode higher or anything. It's pretty light volume type of season around here. And then in January, I think the market's actually going to have a little bit more of a meaningful correction. If we look on just a purely technical basis, the next support level is right here around 1175, right in this area, where it kind of bounced and bottomed nearly twice in November and then in early December. So I think that 1170 is going to be it, even if the market climbs up here around 1250. I think it'll probably come back down somewhere around 1170, and then we'll just take it from there into January. As far as some other things going on, I think that crude is really, really interesting right now. I don't know why. It just seems like it's slowly inching and crawling higher and really starting to break out above this 90 level. If it breaks out above 90, and you can see that's pretty much been a hard level for it to break, and really technically back in April and May, it had a tough time getting above this 90 level. I think that if crude gets above this 90 level, it could easily run up to 95 and 100 in a heartbeat and then start to retrace from there. So that's something to be watching on all of your trades, obviously, and just another opportunity. As always, we hope you guys enjoy this video, and happy trading.